Yes, good afternoon, everyone, and welcome to this afternoon session of yet another entrepreneurship lesson. And this time around, we are going to handle paper 2 as requested in the previous discussion of last Thursday. Are you able to hear me well, all of you? Someone is saying, what of us who don't do entrepreneurship? I think there's a link of chemistry, because always entrepreneurship moves hand in hand with chemistry as far as these lessons of online are concerned here. So you better get the link to that effect and you join your colleagues there. Here we're only going to have those who are offering entrepreneurship. Basically, are you able to hear me? Can I get one to clarify that is able to hear me? You can carry up the hand, yes? Okay. Ampayiro, are you able to hear me? Can you unmute yourself and talk?
Yes.
Okay. Okay. So good afternoon, everyone who is online. This afternoon, we are going basically to look through paper 2, and our main focus, we are going to put on taxation, as you had earlier requested in the previous lesson. But we shall also be going through all the topics, and preferably what is done in paper 2, as we continue to have more discussions. As I always say, I want it to be a lively discussion where we all keep contributing so that we are able to make better lesson. I will spare some time, and I come specifically to handle some of the do's and don'ts in the paper 1. I will come and handle some of the do's and don'ts in paper 2. And basically, we had agreed that in the next lesson, and that is next week, that one will be for paper 3. And with the paper 3, for it, I will be direct. I will handle the do's and don'ts of paper 3 next week on Thursday. For today, it is a lesson, but it will be an interactive one, where if you have a question, whatever, whether it is in taxation, whether it is in any other part, you can still raise it, and we have that, you get that clarification. So starting our lesson here, on the screen, I don't know whether you're able to see the screen very well. To have a WhatsApp program of this work, I always want, after the discussion, I share with you so that you can go and look through the real PowerPoint PDF. So those who may want to access the work, particularly this PDF and any other question, you can still WhatsApp on that one, and you'll get the necessary help, including the techniques of paper 1, all the things we have been discussing through here. Basic tax computation. Now, I don't want to go into taxation of because we are all much aware that it is from paper 1 that we launch all the things we do in paper 2 and this paper 3. So paper 1, of course, we are all aware that we have a topic called taxation. In this lesson, I'm not going to go into that. I'm only going to pick out a part in taxation, which basically applies to paper 2. And that is the part of the calculation, the one we call the basic tax computation. Is the theory part. That one will be for another day, basically maybe when we are handling the paper 1 content. I have specifically been brief. I have started with what they call the individual income tax. We all know that, by the way, what is taxation? Even before we go far, anybody to raise their hand? What is taxation? What is taxation? What is a tax? Can anyone? Yes, any try for a tax or taxation? Okay. Okay, a tax is merely a compulsory payment made by an individual or business towards the government as a source of government revenue. So whenever we talk of taxation, for taxation it is a process, whereas a tax is a compulsory payment made by an individual organization. With the taxation is a process through which government levies or imposes tax on individuals and businesses to raise the necessary revenue used for socio-economic development. Now, when you pick out specifically these different kinds of grounds on which government gets tax, I'm going to be spot on. And this one we have begun with is what we call the individual income tax. Government gets money from very many sources. But when it comes to taxation, according to the 1997 Income Tax Act, I think, as amended in 2012, 2020, there are basically 3 sources of income to the government through which it can levy tax. One of it, there's what they call the business income. There is what they call the property income. And then there is what we call employment income. Meaning, government can impose a tax on people who are carrying on businesses or on businesses which are existing as legal entities, separate legal entities. Government can impose a tax on property of individuals. Let's say when it comes to rental, you have some buildings, you have land which you are hiring out and you are getting money out of it. Government would also wish to pick a tax on such revenue, and such category we call it property income. Then with this individual, someone is asking, how can I get the chemistry session? I think I don't know whether Mr. Kazibe is here to clarify on that. Okay, but last time he said he had shared the link of chemistry. Maybe you can inbox him and see. Maybe he can send you the link, of chemistry. Okay, now I was talking of types of incomes from which the government can levy tax on. We have what they call the business income. Of course, this is now the income which is generated or earned by an individual from carrying out a business activity. Anybody who carries out a business activity will basically gain profits. Those profits you gain, those sales you make, the government would be much interested in picking or imposing a tax on you. There is what they call property income, as I had earlier talked about. And with property income, it is just basically income received by an individual from hiring a property out. When you hire property to another person, in this case, we say renting out. Somebody, you might be having your house and you are renting it out to tenants. There's some money they give you. You have to also remit some to government or to its board which collects on its behalf, and that is URA. You remit there some money, and we call that one rental income, but it falls under the property income. Then there is also what they call employment income, where the government even generates more money. Now with government, or rather with employment income, this one is basically any income which is earned by an individual from any form of employment, any money you earn from any form of employment, whether they pay you a wage, whether you get a salary, whether you just get a commission, whether it is gratuity, whether they are allowances, or they have compensated you for terminating you from an employment contract. You see, there are individuals who can be terminated from work, and they give them a certain money for having worked with that organization. The government will always pick interest in imposing a tax on such monies, and we shall call that category of income as employment income. Now, under employment income, I think that's where we are going to basically even focus with this individual income tax, though it cuts across, as we shall see as we progress. Now, I'm starting here with individual income tax. But after individual income tax, we shall basically look at there is also value added tax. From value added tax, there is a rental income tax. There are these international taxes. So we shall keep following on all of them, including the individual income tax on employment income. Shall go deep in that. So had you covered, how many had covered this topic by show of hand? Do you have some individual here who had covered these things? Yes, by show of hand. Okay, Calvin had already covered that. That's good. There is a whole Abiola. Okay, it's fine. So we shall keep interacting as you keep also helping your colleagues and sharing on what you learned. Now, with this individual income tax, I have basically defined it as a tax imposed on chargeable income or taxable income of an individual. So the word chargeable income or taxable income means the same. So if we say that a tax imposed on taxable income of an individual, by the way, throughout we shall be using the word chargeable income or taxable income. That's why we need to know what is taxable income or chargeable income all about. Now, chargeable income is that income that is subjected to taxation. That income will remain with that government fixed interest to impose income or taxable, the national imposing a tax on you. They first it some that the person who has been it looks weird for a person to be taxed and afterwards leaves bad gets a bad standard of living just because he has paid a certain tax. Someone is saying, I'm not hearing you. Let me see how I adjust the network here. Okay, let me hope you are now.
Can the person who has made herself host, can you please make teacher the host? Like, please.
Okay, let me hope you are getting me again. Are you able to hear me? Now this is, I don't know, is it Kiari and Abiola? Now you have made yourselves the hosts and really denied me access. There's no way I can reach you when you don't make me a host. In fact, I was the one supposed to be a host here, but only that you came in early and you now gave yourselves those powers and you have interrupted. Anyway, it's good we are back. Let me hope you are now hearing me again. I was on still on in video income tax, and I was talking of the chargeable income, or the taxable income. I told you that chargeable income is the same as taxable income. And what is taxable income or chargeable income? It is that income that is subjected to taxation. That income that is subjected to taxation. And I've told you that whereas you could be earning a salary, let's say, of 1 million, the government does not necessarily tax the whole 1 million. There are some deductions, for example, they make. Let us take that it is 1 million profit from a business you are conducting. They don't necessarily charge or impose a rate directly on 1 million. There are some deductions they make before they bring a tax rate and impose on you. So before they bring the tax rate, this 1 million is called the gross income. The word gross meaning total. Now, after they have made those deductions, maybe expenses you incurred in earning this 1 million. Remember, if, for example, if you are in rental income, to earn 1 million, you may find out that you had to load the airtime, move to the tenants, call them. So out of the 1 million, you spent around 20,000 trying to buy airtime and call your tenants to pay you. So when they are going to tax you, this 1 million will be called gross income. It is the total income you earned, gross income. Now, the chargeable income, we shall get this 1 million and remove the expenses you incurred of this 20,000. So the remaining 980,000 is what we call the chargeable income. And it is that income that they will subject to taxation. So maybe if the tax rate is at 20%, let's say, I'm taking an example, now it will be 20 out of 100 or times 980,000, not 1 million. 1 million is total income. 980 is chargeable income after they have removed expenses. That's why we are saying here that chargeable income or taxable income is that income that is subjected to taxation. and is derived from gross income. We get chargeable income from the gross income or total income. That's why here we are continuing to say, this is the gross income less expenses and losses incurred in earning that income. I have defined that statement by highlighting it in red color here. I've said the formula here is to get chargeable income, or the income which is subjected to taxation, or taxable income. We get the gross income, meaning the total income you earned. Then we subtract the expenses and losses. Remember, if you get a profit in a business, that profit, okay, in a rental, let me say, if it is you are owning property in this case, and let's say you have a house which you are renting out, like I've said, if you have collected 1 million, this 1 million did not come on a silver plate without any expense. You incurred airtime, you incurred transport to go and look for your tenants, maybe to pay you. Some of them, you took them to court before they paid you, and in court, you also paid someone. So they have to deduct all those expenses you incurred. Then the balance which remains is what they call the chargeable income. The gross income, 1 million. The expenses you incurred, maybe transport plus legal charges plus lighting. Remember, maybe you pay for them, and etc. Maybe you incurred around 300,000. So the real income, which we call chargeable income, shall have 1 million minus 300,000. So the balance of 700,000 is what we shall call the chargeable income. It is this 700,000 which we shall subject to a tax rate. This is not a tax you are supposed to pay, but this is now the amount which is free and can be touched and taxed at a rate convenient depending on the income bracket. So we are defining gross income here as the income earned by an individual from all sources, excluding tax-exempt income. So any income you get from all sources, excluding, of course, meaning except the tax-exempt income. What does tax-exempt income mean? Tax-exempt means income that is not taxed by law. There is that income which by law is not supposed to be taxed. And such income, we call it tax-exempt income. To be exempted is to be left free of doing something. So if it is a tax, then it means you are free of paying tax. So there's some income in some companies, for example, which have been given that leeway of not paying a certain amount, and they start maybe on a certain threshold to be charged. So gross income, as I said, the word gross meaning total, is the income earned by an individual from all sources, excluding the tax-exempt income. And I told you the sources of income, I told you there are only 3 sources of income. Others you may talk of are just examples of these 3 sources of income. And what are they? It is business income, we have employment income, and property income. Those are the sources of income which forms what they call the gross income. But we subtract what they call the tax-exempt income. There is that income which is not subjected to taxation. Not all businesses have tax-exempt income. Not all individuals who earn from employment have tax-exempt income. It is just, okay, someone is asking, the Galaxy A10 is saying examples of exempt income. Is there someone carrying up the hand to try give some answers here? Exempt income. Okay. Now, so when we go literally according to the Income Tax Act, I think there are some incomes, for example, even from employment, which is not taxed. For example, people who are in armed forces, they have exempt income. UPDF, I think police, prisoners, those people who are in armed uniform, their salaries are not taxed, meaning they have what they call exempt income. They are exempted. To be exempted is to be left from paying tax. So they are exempted from paying tax, plus very many others. But of course, they are not very many. If you let very many avenues which are exempted from taxation, then as a country, you may end up not doing well. Somebody saying that we send notes for this lesson to the group. I don't know which notes he's talking about, but I thought that you are able to see this screen which I'm sharing here. Okay. Now we proceed. Now this is the gross income. We have said it is income earned by an individual from all sources, and we have understood the sources. The sources are either you are from business income or employment income or earning your money from property income. We are going to look at details of such incomes, but we are excluding the tax exempt income. And we have said tax exempt income is income which is not taxable by law. So when we proceed here, I went ahead to look through how they calculate the gross income. But before that, let us look at the definition of sources of income. Like we have said, the sources of income are three: the business income, the employment income, and the property income. Now, business income here we have said it refers to any income earned by an individual from carrying out a business activity. We all know that a business is any legal economic activity carried out with the aim of making profits. So, and you can't make profits without selling. So the sales revenue you get, or what we call the total sales or gross sales, the sale of any business asset that you may be owning, the profits you have made, such monies are always taxed. When you go to paper one, there's what we call the types of taxes. Not forms, but types of taxes. There's this corporation or capital gains tax on the profits made by a limited company. So all those taxes, there are different types of taxes that are imposed on different individuals or businesses depending on your mode of operation. So any income that is earned by an individual from carrying out a business activity, which whenever government imposes a tax on that, they will say we impose the tax on business income because you got that money from a business. Then when it comes to employment income, this refers to any income earned by an individual. Rita is saying is not hearing well. It could be your network. If others are able to hear, then maybe you organize your network. So employment income, this refers to any income earned by an individual from any form of employment, e.g. the wages, salaries, commission received, compensation for termination of employment contract, etc. So if government or URA imposes a tax on someone who has been working and earning a salary, such a tax we shall say, they will say they imposed a tax on employment income. This time around is not a business income because business income is that income got from carrying out a business activity. But employment income is that income that is earned from any form of employment. It could be paid employment, self-employment, whatever. Then we also have what they call the property income. So this refers to income received by an individual from the use or hiring of property by income. That one falls under property income. We all know that they passed a law these days. People who own rentals, they pay tax. That's why we shall rental tax, income tax. Of recent, even they changed its rate. You see, some of these things are made by there, and sometimes they enact some law and they keeps on changing. You may find that 2 years ago, the rental income tax was totally different to what we have now currently. There's a new rate which for you are going to move on. In fact, even when you try to check the question banks, you'll find that there are some questions which still by then they were moving at a rate of 20% on rental income. Today, as we talk, the rate is now at 30%, and the approach has completely changed. We shall look at that. So another one is property interest received. We are still on property income. Examples of those things which can be imposed on a tax, but when they fall under property income. So with the property interest received, let us take an example in a business. You have a tractor, let's say. If you have a tractor and you hire the tractor out, they pay you money in the evening, they bring it back. it means you hired out your tractor and therefore someone used it and has to pay you some money. Now that money they have paid you, it is also taxable and it falls in the category of property income. So they are basically the three sources of income: business, either you earn money from business, or you earn money from employment, or you earn money from hiring out or selling a property. As simple as that. Let's just look at gross income. Now that we had talked of what gross income is all about, we said gross income is the income earned by an individual from all sources excluding tax-exempt income. Meaning, the formula for calculating gross income is total amount of business, rather total amount of income from all sources minus tax-exempt income, just as it is clearly stated here. We get the total income or income from all sources. And we all know that the income from all sources in this case, it is business income plus employment income plus property income. Then we subtract the tax-exempt income. Tax-exempt income is income which is not subjected to taxation, income which is not supposed to be taxed by law. So if you don't say that gross income is equal to total income minus tax-exempt income, you can go direct and add. You income in this case, it is business income plus employment income plus property income, then minus tax exempt income. It will give us what they call gross income, or another word to mean that can also mean total. As I said, gross means total. So according to the Income Tax Act, there are three sources of income to an individual, which we have talked about. That is according to the act. When we talk of an act, it means it was established by law. So our laws here, the Constitution is very clear when it comes to the Income Tax Act, that we have three sources: the business income, employment income, and property income, which we have looked at. So we are sampling out an example. But before we proceed, is there anyone we have left out? If you have your question, you can type in the chat, you can raise the hand so that I don't over-dominate the discussion. Yes? Okay, can we get someone to read for us this example by show of hands so that you're able to read us this example? Because we have talked about chargeable income, we have talked about gross income. We want to see how those things are calculated. Yes, Galaxy is here. Okay. Can you unmute yourself, Galaxy? Unmute yourself and talk. Can you read for us this question? Galaxy, unmute yourself.
Anita earned income from different sources for the year 2023. Yes. Anita earned income from different sources for the year of 2023 as shown below. Business income shillings 2 millions, employment income shillings 4,800,000, property income 1 million shillings. In addition, he incurred expenses and losses amounting to shillings 2,400,000 shillings, while a total of shillings 3 millions out of the gross income as tax exempt. Determine Anita's gross income and chargeable income.
Very good, thank you. Is there anyone else who can now briefly, according to you, how would we calculate that?
Yes.
Yes. Any other person carrying up the hand, if you are there and you can tell us how we would calculate that by first of all briefing us on how we calculate. We looked at the formula of calculating for gross income, and we said gross income is equal to income from all sources minus tax-exempt income, or business income plus employment plus property minus tax-exempt income. Yes, someone is carrying Calvin. Yes.
Gross income. How we find gross income?
She's saying you add all the incomes. In this case,
Income from all sources minus tax exempt.
yes.
So down in state business, business income plus employment plus property minus tax exempt.
Yes, let us continue.
So the business income is 2 million plus 4,800,000 plus 1 million minus 300,000.
Why are we subtracting 300,000? Can you give us the reason?
It's the tax exempt.
Very good.
On chargeable income, we get gross income minus losses. Chargeable income. Gross income minus losses and expenditure.
Should I say it is Abiola and the friend again? You have really interrupted us.
Chargeable
okay.
Income.
Yes.
On chargeable income.
We are now on
Chargeable income.
chargeable income, yes.
Gross income minus losses and expenditure.
Remember in paper 2, when we are doing financial, we start by stating the formula.
So it's chargeable income equals gross income minus losses and expenditure.
You drop the also. Thank you very much. Let us have Zoom user also say something. Zoom user, unmute yourself.
Gross income. Hello?
Yes, we are hearing you.
According to what you have told us, gross income is a total income or income from all sources. And these sources are business income, employment income, and property income, minus the tax-exempt income, which is business income is equal to 2M, and employment income is equal to 4.8M. Then property income is equal to 1M. Then in total, that is, I think, 7.8M minus the total, minus the tax exempt income, which is 300. Okay. Then the answer is 5.1M. Then for the chargeable income is equal to the gross income minus the total expense or losses. Then the total expense or losses, they have already stated them, it is 2.4M. According to the formula, the total income, we have already got it, which is 5.1M minus the what? The expenses or losses given to us, that is 2.4. Then you find the answer there.
Okay, thank you very much for the good procedure given. We shall only verify if the figures given are correct, but the approach is very good. Thank you very much. Together with Kelvin. See it here. I still online so that you go through this very one. Yes. Can you go through this solution, Zoom user? Okay. Okay. You have done it very well. Gross income is equal to the total income from all sources, basically 3, and that is business income plus employment income plus property income. Business income was 2 million, and our property 8,000, which is tax exempt income. In the statement here, they said while 8,000 out of the gross income was tax exempt. That's why we have subtracted it. To exempt is to, of course, to deduct and be free of that. So the 7,800,000 minus 300,000, it gives us shillings 7,500,000. In entrepreneurship paper 2, make sure you state the formula first. In fact, not even paper 2 only. Whether you find the calculation in the section A of paper 1, whether you find it somewhere in paper 3, always the formula first. Even if you pass these others down, if you have not stated the formula or the formula is wrong, even what is down will also be considered wrong. So it is always important to master writing the formula. Then you have said that chargeable income is gross income minus expenses and losses. Remember we talked about that chargeable income is equal to gross income The host, you are really interrupting us, the so-called co-host. You are interrupting us. Hope you are able to follow once again. Are you people able to hear me? Or there is network issue? Mosh is asking what's wrong. One of your colleagues is the one who is disconnecting us here and then. So that's basically what gross income is all about and what chargeable income is all about. Is there anyone we have left behind so that we make a clarification before we proceed? You can, if we have left you behind, you can write in the chat room or you carry up your hand and say it out. Where did we leave you from? If there is none, then we can proceed. Okay. Now the trial exercises here. I don't know how you make it, but I wanted you to try on this exercise and be able to do it during your free time. Let someone carry up the hand and read for us, as others, those who are writing, they can be able to copy this question and practice it. Yes, Abiola. Let me unmute you. Abiola, your hand was up. Yes.
Petito and income. Wait, are you hearing me?
Yes, we are able to hear you.
Okay. Petito and income from different sources for the year 2021. Profit made on sale of business machinery was 6 million shillings. Salaries earned 6 million shillings. Property interest received 4 million shillings. Transport allowance 2.4 million shillings. Rent income 12 million shillings. Gross sales 9 million. In addition, he incurred total expenses and losses of 12.4 million shillings, while tax exempt income for the year amounted to 7,080,000 shillings. Calculate Secchitor's gross income and chargeable income.
Thank you very much. Can you identify for us, if you are still on, you identify for us what business income is in this case, what examples fall under employment as they have listed them here. This time around, they have listed examples of business income, examples of employment income, and examples of property income. Can you spot for me out as you list them? Or any other person who is able to tell us that this one falls in this category? For example, profit made on sale of business machinery. We are all much aware that when you sell something, when you sell an asset in a business, that is business income. Where does salary earned lie? Is it under business income, property income, or employment income? I want someone to carry the hand and tell us that. Abiola.
So salaries and falls on employment income.
Yes, good.
Property interest received falls on property income.
Good.
Transport allowance. I am not sure about this one.
When we give an allowance to someone in an organization, it means that person works for us, isn't it? So that one goes under
employment.
Employment income. Good.
Okay, then rent income is rent income falls under property income.
Yes.
Then gross sales, is that business? No.
It is only business which sells. Therefore,
Yeah.
gross income, rather gross sales goes under business income. Very good.
Okay.
So can someone just go through without, of course, our technology may not enable us to write here, but can someone briefly show us the formula of how we would calculate this? Zoom user, the hand is up. Yes. Zoom user, can you unmute yourself? Okay.
Number one, they wanted the gross income. And I think we are going to use the same method, the same formula that we used there.
Yes.
About gross income is equal to the business income plus employment income plus property income minus the tax exempt.
Thank you. But before you proceed this time around, now that they have not stated directly that business income or employment or property, they haven't stated them directly. Let the formula be gross income is equal to income from all sources or total income minus tax exempt.
Yes.
Yes. Continue.
Then as you have stated and you have classified them, the properties and what and property income goes to this and this, then you have to add them and you get the total income. You get the gross income or the total income. Then for the chargeable income, we are going to use chargeable income is equal to the gross income minus total expenses all and losses. Then we get that total that we have got minus the expenses or losses that they have given us in the question, which is 12.4 M. Then we find the answer.
Very good. Thank you.
Okay.
Any other person? Calvin is also carrying the hand up. Let me see what Calvin says. Yes, unmute yourself.
I think from the method we are using.
Speak a bit louder.
I think from the method we are using, income from all sources minus tax exempt, which is
Yes.
business plus employment plus property minus tax exempt.
Yes.
So you get the business income from profit made on sale on business machinery. You add transport allowance, you get the total, you got employment, and you continue doing so until you get the answer.
Okay. Thank you. Now, here in this case, I was just trying examples of the category in. Otherwise, once you state the formula that gross income is equal to income from all sources minus tax exempt income, don't again state business income plus employment and the property because they haven't stated $1,400,000. You get the total here not 5 million, it is 7,080,000. So you get the total up there. Of profit made, salaries, property, transport, 1,080,000 positive the gross income. Now chargeable income we shall get one is saying is transport allowance. Taxed. I think when we are designing a payroll, when you're designing a payroll in paper 2, we are all much aware there's what they call basic pay. The basic pay plus allowances, all allowances, medical, transport, plus what? Then minus deductions. So if we are looking for a net pay, we get the basic pay plus allowances, and that one tells you directly that all allowances are taxable because they are part of the income you are receiving. Hope Galaxy, you have been answered on that. Now that proceeds us to the next. Okay. I now want to look at still individual income tax, now on employment income. I want to spot out employment income. I want to go in business income for now. I'm not going to property income for now. I'm picking out one source, and that is employment income. Employment income, of course, the money they keep deducting is the one we usually say pay as you earn, pay in short. So I want to look at how do people get taxed in Uganda here. Some of you here, someone is getting 10 million and you say he's getting a lot of money, 20 million. But by the end of this lesson, you would have realized how much that person takes home. And this is not fiction, but this is a reality. These are the monthly tax rates or annual tax rates that they employ in Uganda here, which are being used by public service and the likes of URA to make sure that people so these are not units, but they keep updating these tables or these lines together, depending on how they keep updating us on the new changes. So I want us now to look at employment income. Yes. Income tax and income from employment. All the people who are in employment, people who are working for others. So most people paying the individual income tax and income from impact source through the, for those who are working for government, it is the public service that does pay the employees or workers in Uganda here. However, there's certain amount they have to deduct so that they give to government, to URA in this case. That money, of course, the system they use is what they call the pay system. They pay as you earn, meaning if you are there and you're not earning, for you don't pay the pay as you earn. And these deductions are made at the source. They don't first give you the money and then later they demand that you pay. No, they will show that we gave you 4 million, but we have deducted this amount, which has gone to tax, and now the net pay, which is on your account, is this one. They will always show you that. That's why we have said it is recovered or deducted from the source through the pay system. The person paying you will first chop that amount, and then they give you the remaining balance as a net pay. However, they don't do those deductions. There are some rates they follow so that we are able, for instance, our annual tax rates, which they use for a full year. However, because underemployment in Uganda here, most people earn salaries at the end of the month. Now that they earn salaries at the end of the month, I've tried to extract this table and go with the monthly tax rates. But as former students of mathematics and you and those who are doing math even in A level, monthly tax rates stage, which involves the table will always be provided. Okay, the table will always be provided. I don't know what's wrong with today with the network. And this is our table. I'm not sure whether you were able to see it there. But what you have to know here is that pay is collected by employers, or in this case, if it is government, is by public service and the like, or Ministry of Finance, who are the people behind the payments. It is collected by them, then they remit it to URA. They pay to URA. So the employers are authorized by the Income Tax Act. They are given permission by the law which was established, the one we call the Income Tax Act, to withhold a certain amount of money from employees monthly and then pay it to URA by the 15th day of the following month. Meaning, if you have paid me December, I expect my employer to have paid for the following month. When we look at this table very well, I don't know whether you're able to see it. This pay monthly tax rates. In the first column, we are seeing income and then the tax rate. The rate meaning the percentage at which they use to deduct the tax amount from your gross income. Now, by law here in Uganda, anybody who earns below shillings 235,000. Between zero to 200. Then I remember is lying you. People who earn below 235,000 in Uganda here, they are not paying tax. So that one, the point for taxation in Uganda here, when it comes to pay us, you are the tax rate is, that is the first bracket we term. If you earn between 235,000, between, meaning you are not exactly 235,000, but you are slightly above. That's why we are saying 235,001 to 335,000. If your income is between there, there, it means you will pay 10% of the amount by which chargeable income exceeds shillings 235,000. Meaning, if you get 150,000 is not in the, but it is in the second bracket. It lies between 235,000. First bracket we have said okay. I was saying if I earn 250,000 250,000 lies in the second bracket. But now, to be fair, if you are telling me that my colleague who earns 235,000 has not paid tax, the tax is nil. Me of 250,000, I would first of all also get 250,000, which you are not supposed to pay, and that is 200 amount tax underpay. We shall subject it. I don't know what is happening today because it isn't a network issue. Where I am, it is where some of you are. So I don't think this is the issue of network. I don't know. Okay. So I was trying to say that now we get the 250,000, which I subtract 235,000, which is the threshold. Now, if I remain with 15,000, I subject it to a tax of 10,500. Meaning in Uganda here, a person who earns 250,000 pays a tax of 1,500. The third bracket. If you earn between 335,001 to 410, in mathematics, you must have studied about class boundaries. We are just in the issue of class boundaries here. So 335,000 to 410,000. The law now says you pay shillings 10,000. You first pick 10,000, put it there. Plus, in addition, meaning in addition, you pay another 20% of the amount by which chargeable income has exceeded 3. Time round, it is not 235, it is 335. Why? What was the lowest class boundary now becomes the highest, and what was the highest class now becomes the lowest class boundary, like that. So we see that here, the 10,000 has been calculated. The instance of paying 10,000, it is when they calculate through, they say that a person who is in the third bracket, who is earning 335 to 410, he or she should get the through and bracket 2 there, that bracket 2. Then which has exceeded 335,000, meaning in Uganda here, if I earn, let's say 360, if I earn 300, lies in the third bracket, it means I will pay 10,000 plus 20%, which is 20 out of 100. Then you open bracket. Language here was 20% of the amount by which chargeable income exceeds shillings 335,000. That amount has exceeded 335,000. And indeed, 360 exceeds 335,000. So I will get my 360,000, which I earn, minus 335,000. You find out that I remain with the, how much there? That is 25,000, I think. So I remain with 25,000. It is this 25,000 I subject to a 20% tax. So 20% of 25,000, basically you may find that it is 5,000. Now if it is 5,000, I will get the 5,000 plus the 10,000 here. So in total, I will pay 15,000. So in Uganda here, if you earn a salary of 300, your tax is 15,000. Are you still following me? Okay. And the trend continues to the third bracket, rather the fourth bracket. The fourth bracket is subdivided into 2. We have bracket A, so that you are able to see exactly what I'm talking about. Who can read for us that? Any good Samaritan there? You carry up the hand and read for us this. Yes? Okay. So there's no one to read for us this, or you're not able to see? Someone to carry up the hand and read this, so that we'll go through a workable example. Okay. The following, the example is here. The gross monthly salaries for the employees of Rick Enterprises Limited. And when we look through, we have Mercy, okay. Here is reading for us and he has put the hand down. Kiara, can you come back and you read? You had carried up the hand. The gross month 300%. That is zero. Zoom user, do you have something to say?
I wanted to read, but
It's
I'm
okay.
not seeing anything.
You're not seeing anything?
Let me.
This
Now I'm seeing. Should I read?
Yeah, go ahead.
The following are the gross monthly salaries for the employees of Rick Enterprise Limited. Massey, shillings, 200,000 shillings. Sharon, 300,000 shillings. Tito, 6,000 shillings. 300, Shadrach, 11,000
Shadrach, it is
shillings.
11 million.
Yeah, it is 1.1 M. Required using the
No, let it
pay
be
tax.
11 million.
Yes?
Read it as 11 million. We forgot a zero there.
Okay, 11 million. Then required using the pay tax rate provided above. Calculate the amount of pay payable monthly by each employee.
Very good. Before you go off, now I want to drive you back. Massey earns how much? How much does Massey earn according to this question? Yes, Zoom user, you can talk. Just
200
unmute yourself.
shillings.
200,000?
Shillings.
Now let me take you back. Don't go off. Let me take you back here. Where does 200 lie according to this bracket?
The first one.
So which tax does Massey pay?
None.
So Massey does not pay tax in the simplest term.
Yes. I'm not sure.
The second one, Sharon.
I'm not really hearing well.
300,000 lies in 235,000 to 335,000. Now, let me take you back to our worked out example. Can you read it here? Zoom? Unmute yourself, please. Okay. So Zoom has failed to unmute himself. Okay. Massey earns 200,000 shillings. According to our solution here, Mercy's monthly pay is nil. This is because the monthly gross pay is below the monthly tax threshold of shillings 235,000. Already, if you earn 200,000, it means you are earning below the amount which is supposed to be subjected to taxation. And our starting point, the one we call threshold, is 235,000. Now Sharon earns 300,000. Zoom, are you going through? Can you read for us what Sharon, how I've calculated here? You go through.
Sharon monthly pay is equal to 10% of amount exceeding shillings 235,000 shillings, which is equal to 10 out of 100 in brackets 300,000 shillings minus 235,000 shillings. Then that is 10 out of 100 times in brackets 65,000 shillings. In total, when you calculate, that is 6,500 shillings.
Good. Now, if Sharon gets 300,000, and we have said in Uganda here, a person who gets 235,000 does not pay tax. What is the excess of 300,000 and 235,000? It is 65,000. The difference between the one who doesn't pay tax, a salary of 300,000, it is 65,000. That's why they are saying 10% of the amount exceeding, which goes beyond 235,000, and that is 65,000 because the person earns 300. Now we subject that 65,000 to a rate of 10%. So 10% of 65,000 gives us 6,500. We couldn't say that we are taxing 10% directly on 300,000. There we would 100,000 not paying anything. Now me of 300, you can't subject me to a tax of 10% directly. We first remove what my friend is not paying. That is 235,000. The balance which remains is the one we subject to a 10%. In this case, the balance here was 65,000. Someone else? M here is raising the hand. Yes, M? M, you can unmute yourself. Okay. Okay. Now, this takes us to, let me see, Tito. Tito earns shillings 600,000. 600,000. Let us go to our income brackets and see. A person who earns 600,000 is not in the first bracket, is not in the second one, is not in the third one, because 600,000 is beyond 410, meaning this person is in the fourth bracket, is earning 410,000 and above. Now, if you earn 410,000 and above, the brackets, the tax rates are subdivided into two. We have bracket A and B. We have A and B. In A, you pay shillings 25,000 plus 30% of the amount by which chargeable income exceeds shillings 410,000. Then in part B, where the chargeable income of an individual exceeds shillings 10 million, amount by which chargeable income exceeds shillings 10 million. What they are trying to mean here, if a person earns above 410,000, but also that person is below 10 million, you are below 10 million, but also you earn above 410,000, meaning you're in between there. For you, we only apply bracket 4, part A. Only part A will work on you. But if you go beyond 10 million, let's say you earn 11 million, or 12 million, or 13 million, we shall first of all calculate bracket A plus bracket B. Both brackets will take, both parts will take you. Part A and part B will all be applied on you if you earn above 10 million. But if you are below 10 million, but also you are above 410,000, we only apply part A of paying 25,000 plus 30% of the amount by which chargeable income exceeds shillings 410,000. So in this case, Tito earns 600,000, meaning he's not getting above 10 million. Therefore, we shall apply part A on Tito. Say 25,000. That is that out of 100 into bracket. The amount by which chargeable income exceeds 410,000. We shall get our 600,000 minus 410,000. So when we go back to our solution here, you see that it shows monthly pay. Okay, let someone read it for us here. By show of hand, Zoom, are you on? You read here? Okay. They will put up the hand and go through this. Okay, so it went off again, but next time you make sure next time you just join and you don't call yourself hosts. It is what is causing this. Next time you just join, and if I've not yet joined, you just keep in the class so that we avoid these errors. Now, I was talking of 600,000, and I said 600,000 lies in bracket 4, but part A. So such a person is going to pay 25,000 plus 30% of the amount by which chargeable income exceeds shillings 410,000. So when we come to our formula here, we have said Tito who earns 600,000 is going to pay 25,000 plus 30% of the amount exceeding shillings 410,000. So we shall have 25,000 plus 30%. We 600,000 minus 410,000. So the answer here we shall have 25,000 plus out of 100 times 190. So the difference between 410 and what we earn, which is 600, what total earns 600 is 190. It is what okay. So Shedrack earns 11 million. Someone had calculated and told us, let me see. So I saw someone giving an answer here in the chat room. Okay. Shedrack earns 11 million, and we all know that 11 million lies in the last bracket, and it goes up to part B. Because part B says where the chargeable income of an individual, exceeds shillings 10 million, an additional 10% is charged on the amount by which chargeable income exceeds shillings 10 million. Now that this person is earning 11 million in this case, it means we'll have to go, Shedrack will have to, first of all, go through bracket A, another part B of bracket, part A of bracket of the last bracket. After that, you come to part B of the last bracket, which is the fourth bracket. So we'll have to pay 25,000 plus 30% of the amount by which chargeable income exceeds 410,000. Then plus again 10% of the amount which would have exceeded 10 million. We all know that the amount which has exceeded 10 million here is 1 million because the person is earning 11. Now, what goes beyond 11 million, beyond 10 million, the difference between 10 million and 11 million is 1M. Let us go back to our solution here. The solution Shedrack monthly I think someone was right. Give a correct answer there. So Shedrack has monthly percent of the amount. this has not been an issue of network. You have really, the person who did this has really interfered with us. So this is what Shadrach will end up paying 3,302,000 as the tax in this case. Because of those technical glitches, I think we shall end our lesson here, but I will talk to the organizer. We rectify this. The challenge has not been on the network. Where I am, the network is 100% very okay. Having very many hosts is what interfered the whole process. Otherwise, we were supposed to go to value added tax. And we look